Hi, David Moore, Equity Advantage with Robert Smith of Peregrine Private Capital, and we're having a lot of fun today. So for future content, I'm bitching and moaning a little bit about a few different things, but I'm a little cranky today. So it is
Imagine that.
Yeah, imagine that. It's mid. Usually he's the cranky one. Usually I'm the one that's all bubbly, happy, and all. Today I'm like a little bit off. So. It's mid-August of 2023 for future context, and I think we were talking a little bit during our break about rights of ownership on things, and I sort of feel like there's lots of things sort of indicating to me that those to be our wonderful government and those in power, I think that they're sort of against us owning things these days, and I've never been a real fan of eminent domain and those things, but I think if we look back on COVID, we had a number of clients that basically were told by the governors in some states that their tenants didn't have to pay them, and yet they still had debt service they had to take care of. And we were talking about a variety of different things that you see happening out there. And you want to sort of give our audience your thoughts on a few of these little topics and where you see things going. And I guess one other thing, just before you jump into that, I got an email from actually a very good friend, a mentor of mine last week, and he was talking about insurance. And we've been seeing this in for those of you that know me, I like big boats. And one of the big problems in that world is insurance these days, especially like if you're in Florida. But the insurance gets tougher and tougher yet. If you can't get insurance, you can't get a mortgage, you can't finance it. You're just going to have a stagnation of that. And so this email I got from my buddy last week was just talking about older apartment buildings and the rapidly reducing market of available insurers for those buildings. And you think about what would happen if you've got a building that's older. And he was talking about maybe a 30-year-old building or a 40-year-old building, and it's sort of regionally dependent. But if you've got one of these assets and it's an older thing, and you might have it underwritten and taken care of, but if you've got a difficult time for somebody else to be able to insure that thing, you're not going to be able to sell it, which is something that's very sort of unnerving for me, I guess I should say. So, these things are things that we're sort of seeing in the marketplace, and I'd like to hear your thoughts on it, because you and I haven't talked about these things. But if you've got these older buildings, talk to your insurance people, see what's going on in that market, see if they can shed any light. Don't be caught out. So that's why I like doing these little sessions with you, to hopefully get some things out there that people may or may not be aware of.
Yeah, there's obviously a great deal of institutional change afoot, whether it's property ownership type, insurance, all those things that retail investors have to be aware of and stay aware of. And we think that the ongoing attack on property rights up and down the West Coast, East Coast, pretty much every progressively governed city in the United States goes beyond just property, because everywhere you look in the free world, individual liberty, personal freedom is in no small part predicated on property rights. Where property rights are sacrosanct, then people enjoy personal liberty, personal freedom. Where they aren't, you don't. It's not any more complicated than that. Because if the government can take your property from you, then they can take anything from you, including your personal freedom, your liberty. So we think this attack on property rights, on individual ownership, is very, very pernicious, and long-term goes much, much deeper than that. And so in light of that, we would encourage people to consider taking their sweat equity, if not their person, to those places, those regions in the United States where property rights are still honored, and people still enjoy personal liberty. I would analogize to the Bolsheviks in Russia in 1917. How well did the bourgeois that decided, well, we'll just wait the Bolsheviks out, how well did they make out? Not real well.
No.
And so it's important to be aware of the depth of progressive government antipathy to property rights and correspondingly personal freedom, and over a period of time take whatever action is necessary to protect yourself from that, to hedge against that, because it doesn't appear to want to stop.
Yeah. Well, Bob, you're really a student of history, and I always think back. You think about the old saying on history, right? Those who don't study it are condemned to relive it, right? So, you mentioned just Russia, that situation back there, and that wasn't that long ago. No. And you think about what happened. You think about World War II and what happened there, and everyone just sort of sitting back. You think about how quickly things change. You think when COVID hit and what the impact to the real estate or CRE, like you were talking about earlier, not just the residential but the commercial real estate industry. It really impacted everything, and we're starting to really feel the repercussions of the whole office thing, and the retail probably too. You think about who benefited and who didn't during that period of time. So it's really interesting that you think about that. You got to sort of really pay attention and look at what's there. And one of our now retired outside legal counsel, he says, he always used to joke. He says everybody thinks they come up with these genius ideas. He says there's very little new thought. It's just old thoughts being regurgitated. And you just sort of look at it and apply it differently. But I think we're in a situation where you really got to be, pay attention to what's going on out there and learn from any resources you've got available. And
you mentioned earlier in conversation, we were talking offline, that the government wants you to own nothing and be happy. And I don't think that's too much of a stretch, because as you just mentioned, what happened during the pandemic, when the government intruded into the multifamily sector with its arbitrary eviction moratorium, what that amount in its baldest form, that was simply a taking of property by the government from individuals for an indefinite period of time. And no one said anything. Yeah. It just, people bowed down and let that happen. And we projected out from that saying, okay, because once government takes something, it seldom wants to give it back. Okay, and so what's next? Well, when the moratorium, quote, ends, the Biden administration will illegally attempt to extend it, pleading humanitarian concerns, which is exactly what they did. Fortunately, the Supreme Court overturned that, but it is this arbitrary and capricious encroachment on the part of government in the real estate space, because real property does give you some independence. It's different from the capital markets, and whether government articulates it or not, they don't like or approve of that independence. And so you as an investor in real property should be aware of that and looking for those opportunities that are most distant from government encroachment. Yeah. And that way, in those places that are disinclined to encourage government encroachment, and that way you may protect yourself as much as possible from this very insidious process of the taking of personal freedom.
Yeah, definitely. So there's a couple of brokers, good friends, good family friends, and their mom was a broker too, and sharp lady, really nice family. And you'd like them because they actually ran at UCLA too. So actually, despite being at UCLA and you being the Duck, but
they were fast.
They were. Yeah. So, but anyway, they made a comment. Actually, the mom made the comments like on the house. And this sort of dovetails in, and if you haven't seen if you type in, you want to watch a video that's sort of entertaining sometime, it's Ask the Geezers is what it's called. But this guy, unfortunately, we lost him a bit ago, but Bob Nelson, and he made the comment, he says, real estate's, now, if you've seen our videos, you've heard me say it before, but I'm going to say it again. He says it's not a get-rich-quick scheme. It's a get-rich-slowly but surely scheme with one golden rule. Don't get yourself in a situation where you got to sell in a recession. And the reason I bring up the other mother and the sons is that she always taught them, basically, if you own a home, just make sure the debt service on that property is less than what you could rent it for. Right, so if it's really if hail and brimstones, you got to move out, rent the place out. You just don't lose it, which I just think that's a great thing. So we've been talking about some sort of dark deals today, and I just want to say, think about what's there. And I'm a real estate guy. You're a real estate guy, and you think about Wall Street stuff. It drives me crazy, and the liquidity of it gives the instability, right? But I sort of feel like my Wall Street stuff, if it was all IRA 401k money in there, I'd be a lot happier, because if the market, I'd put stop losses on everything. As soon as the things start going negative, boom, go out and then have it go back in. But if it's taxed money that's there, I've got to sit there, and anybody, it's a Wall Street advisor, is going to say, well, you should be long term anyway. But why do you have to go for those rides? If you're in qualified money, you can go to cash and don't worry about it. But with taxed money, every time that thing dips, my instinct is I want to just try to get out, but I can't, because I'm going to lose 40% of what I made. So it drives me crazy. And if you look at one of the attacks on real estate, on 1031, every few years we have to defend it. I get tired of defending it, but they say, well, gee, Wall Street, we don't have 1031. Yeah, but you got all this IRA 401k funds. Now, if you want to put your IRA 401k funds in real estate, talk to me. I'll help you do that. We've got a company that'll do that for you. But you think about 1031 really is just an IRA for real estate. I mean, it gives you that liquidity. But the things that I love about real estate will never go away. So when we're talking about these shifts in market, the beautiful things about real estate are, one, that you're not banking that it goes up in value to make you money, right? If it's something that's generating income, it's going to give you that cash flow. If you got a loan on it, you're going to have interest deductions. You're going to have depreciation on it. With DSTs, you're going to have that depreciation. If you tell your financial advisor, hey, I want to go diversify into real estate, they're going to sell you a REIT. Okay, that's not real estate. It's a thing that owns real estate, but you don't get the benefits and burdens of ownership of real estate. So that's that beautiful thing with the DSTs and the different. So we'll probably, next segment, we need to talk a little bit about the products and what you're seeing and good hedges against inflation, so on and so forth. But you're not betting it's going up. You got somebody else paying for it. You got those tax benefits. And at the end of the day, you either choose to pay the tax if it's a long-term asset, long-term capital gains, or you do an exchange and keep it going. So those are all those things that I love about that real estate. But that primary deal is you're not betting that it's going to go up in value to make you a nice return. And that's the power and the beauty of the real estate. So and if you do the classic swap till you drop, at the end of the day, you pass away, you become an angel, your heirs get that stepped up basis, current market value, and they don't want it, they can sell it. So thank you. David Moore, Equity Advantage, Robert Smith, Peregrine Private Capital. Don't go away. We'll be right back.